Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, as well as Sara Marshall, Senior Index Research Strategist at Nasdaq Global Indexes. We're here to discuss asset class rankings, areas of long-term strength, and where flows are tracking. It's great to have the both of you with us, as always. Chuck, let's take a look at U.S. equities. Keeps the first number one in our asset class rankings. Any movement, though, any signals that have popped up?
Yeah, it's still number one. It's lost a few signals of late. I mean, nothing crazy really. And I would say, all those signals that it has lost, it's gotten picked up by international equities, which is number two in the asset class rankings. So it's not a bearish thing. It'd be weird if you saw some of the more defensive asset classes pick up those signals like cash or fixed income. But that's not what we're seeing, even with, the modest pullback that we've had in the market. Um, we've seen the S&P's dropped, with today's action right around 5% or so from the high. And that's kind of brought the S&P back to the middle of its trading band, which, if you don't know, like Dorsey Wright's methodology is kind of a way to think about short-term fair value. So we've probably been needing a bit of a pullback here in the market. So it's not, completely unprecedented to see what we've been seeing, but we don't really anticipate it being much more than that at this point. Breadth has pulled back a bit, but has kind of been mostly tied to the market. In other words, like it's usually weird when breadth pulls back, but the market kind of stays where it's at. But we've had a decent pullback along with the breadth. So I think, from a market standpoint, like I said, U.S. equities are still number one. That's our kind of long-term asset class rankings. Yeah, there's been a little bit of weakness, in the S&P and the Index and different things, but nothing crazy at this point.
Yeah. And Sara, let's talk about the Nasdaq 100 chart specifically. You've a sell signal for the first time since April.
Yeah, so the Nasdaq 100 point figure chart moved to a sell signal last Friday on the 14th for the first time since April. That is also when the trend flipped positive, so a lot happened in that month. But one signal does not necessarily make a trend here, so just something to note. One sell signal or initial sell signal and a strong uptrend. Similar to the S&P 500, we're near the middle of the trading band, and again, we remain in that strong uptrend. The Nasdaq 100 has fallen about 6% since the all-time highs in late October. But we are testing support here. There's the support at the 24,400 level, and then further support available at 23,000. So again, one signal in a strong uptrend isn't necessarily the start of a new trend, but just something to monitor going forward.
Yeah. And Chuck, let's flip over to fixed income for a moment. Still in last place, but there's been some movement within the asset class itself.
Yeah. The asset class itself has seen U.S. corporates have moved up to the number two spot. High yield still at number one. Seen a decent drop in international sovereign debt, which was number two. It actually fell all the way to number five over the last couple of months since we talked. I think a lot of that comes down to the U.S. dollar having rallied so much of late. It's going to hurt some of that stuff. But overall, even though fixed income is in last place, and it really has been for a while, it's doing well for fixed income, right? It's up 6.5% for the year. That just kind of it lags some of the other asset classes, right? You're not going to match international equities or U.S. equities with that kind of return and see some relative strength. But within the space too, like when we look at something like the 10-year yield. Of course, that kind of fell off after we had that weak jobs report in September. It's rebounded a little bit. It's up around 4.1% right now, which is it's pretty healthy level for it to be at when we look at the chart. I will say that a lot of these fixed income groups, especially like quality fixed income, is starting to look a bit oversold with this kind of rebound in yields. I wouldn't say it's a no-brainer yet. It's not like deeply oversold, but it's starting to get there. So that's something kind of interesting to watch. We could see a move down in yields once that starts to go. But I
Yeah.
think probably the most interesting thing going on in fixed income, and I may have mentioned this last time, but it's gotten even more pronounced now, is the MOVE index, which is kind of like the VIX for bonds. It kind of keeps hitting these new lows, and new lows that we really haven't seen since the end of 21, which is, kind of around the time when inflation really made a mess of the fixed income markets, right? And so to see kind of volatility, go back to a more normalized level is a really good thing to see.
All right, and Sarah, let's talk about some of the sectors here, or not some of the sector, but the Mag 7, certainly getting a beating as of late, that's for sure.
Absolutely. So these returns are through yesterday's close. So the Mag 7 names, all of them are down from all-time highs except for Alphabet or Google, up about 6%, which I thought was interesting. Meta down the worst, about 20%. I'm sure these numbers are going to look even a little worse after today's action, especially Nvidia. But since that all-time high on October 28th, there are two industry groups that are contributing positively to the index itself. And I just wanted to point those out just because I thought it was pretty interesting once I dug in, and that is energy and healthcare. Some of the top performing healthcare names on a total return basis are up double digits. So that includes Amgen, Biogen, and Regeneron. So these are pharmaceutical and biotech companies. But within the healthcare space, not all healthcare names are participating because there's names like GE Healthcare Technologies and Dexcom, which are medical equipment names, and those are down double digits. And so I wanted to dig a little bit deeper into that healthcare angle, and I just wanted to point out that the Nasdaq Biotech Index, symbol NBI, is up 15% since the start of Q4.
Yeah. And to wrap up here, Sarah, where we're seeing flows going, it still appears to be the AI demand story when you look at where the money is going.
Yeah, so not just the straight up AI indexes you would think of as like the semiconductors or things like that, but we're also seeing flows into the smart grid infrastructure. So the clean edge, the Nasdaq OMX Clean Edge Smart Grid Infrastructure Index, as well as junior silver miners, which is a very interesting play. I know we've talked about that before, just the importance of silver in some of these technologies that we need for not only solar energy, but EV electric vehicles, and data center infrastructure. So they all kind of play around that same theme. But again, strong month to date inflows to about semiconductors, smart grid infrastructure, junior silver miners, and U.S. rising dividend achievers, which is which is interesting as well.
All right. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.